Hello, everyone, and welcome to the kickoff of our monthly Waukesha State Bank Wealth Management video calls. Each month in this brief 2 to 3 minute call, we'll be reviewing pertinent market information that might be impacting your investment portfolio, as well as investment themes that we're deploying throughout the year. Following the late year market rally in both stocks and bonds, the month of January has been mixed. The S&P 500 and the NASDAQ Composite are both up a little over 1% in the month, whereas the Dow Jones Industrial Average and the Russell 2000 Small Cap Index are in negative territory. The main driver behind the late year Santa Claus rally were comments from Federal Reserve Chairman Jerome Powell at the FOMC meeting, where he basically stated we're at or near peak interest rates, and the next move by the Fed will most likely be a rate cut. Currently, the market is factoring in 3 to 4 25 basis point rate cuts this year, most likely starting in that June timeframe. Recent economic releases point to a continued strong economic growth, with fourth quarter GDP coming in a little over 3%. Unemployment remains quite low at 3.7%. As we roll through corporate earnings releases in the next 45 days, we'll be keenly looking for management commentary and their forecasts for this year. We've tracked data points over the past few months that do point to a slowdown. However, we believe that a soft landing scenario for the economy remains very much in play this year. Near term, the key issues that we remain concerned with are an escalation in geopolitical conflicts, potential for derision later this year following the fall elections, and of course, the extraordinarily high debt level of our national debt. On the other hand, positive tailwinds continue to be a full employment economy, potential for interest rates coming down later this year, and a lowering of inflation rates also. Factoring in all these variables, we expect returns in both the stock and bond market to be comparable this year, possibly in that 6 to 8% range. A number of investment themes that should benefit with this as a backdrop are reshoring of manufacturing companies and jobs here to the US, namely from China, increased infrastructure spending in areas such as power generation, electrical grid upgrades, semiconductor manufacturing, pharmaceutical production. If you would like to discuss any of these topics in further detail, please give us a call and speak to one of our investment professionals, and we'd be happy to go into further detail with you. Thank you for tuning in.